Welcome to the Crypto Ledger. Today, we're jumping into a crypto mystery, a massive 200 million XRP transfer that got the whole market buzzing, with everyone guessing a huge price swing was coming. But was it really what it looked like? As we're about to find out, the real story was hiding in plain sight.
Okay, so let's get right into it. What was the event that put everybody on high alert? Well, it all started with a notification that traders and investors are always watching.
So this all kicked off when a service called Whale Alert, which, tracks these huge crypto movements, flagged not one, but two gigantic back-to-back transactions. We're talking 100 million XRP and then another 100 million XRP moved within just a few minutes of each other. And listen, we are not talking about small change here. The combined value of these two transfers was around $375 million at the time. Anytime you see an amount that big, move that fast, you can bet it's going to get people talking.
Now, this is where the mystery really starts to build. The initial alerts were super cryptic. They just showed the money moving from one unknown wallet to another unknown wallet. That lack of clarity, it immediately threw fuel on the fire of speculation. Who was moving this kind of capital, and what were they planning?
And this one tweet really just captured the feeling of the entire community perfectly. People saw this and thought, okay, something big is about to happen. It looked like a classic whale making a move before the rest of the market catches on. So what did everybody think was going on? I mean, when you see a move this huge, the rumor mill starts turning, and a couple of big theories usually bubble to the surface. This time was no different. On one hand, you had the market accumulation theory. This is the idea that some savvy, deep-pocketed investor was quietly scooping up a massive amount of XRP while the price was kind of low, getting ready for a big pump. The other theory, which was just as bullish, was that a major holder was just moving their assets into secure cold storage for safekeeping, a huge vote of confidence in XRP's long-term future. And the context here is absolutely key. You have to remember, at the time, XRP was trading below $2 and had just shown some real strength by holding important support levels. This whole thing fit the classic whale playbook. Make your big moves while the market is quiet, right before things are about to shift. From the outside, it looks like a perfect bullish setup.
But here's the cool thing about crypto, right? We don't have to just rely on speculation and rumors. We can actually go look for ourselves. We can follow the trail right on the blockchain and get some concrete answers. The headlines were definitely exciting. A mysterious whale, a $375 million move. But was it the truth? Well, to find the real answer, you gotta do what every good crypto investigator does. You dig deeper. You follow the money. And this is where we pull back the curtain. Because when you actually dig into the on-chain data, a very different and, let's be honest, a much less dramatic picture starts to take shape.
Did you know that 80% of the people who watch our The Crypto Ledger videos are not subscribed? Please help us with your subscription to continue uploading more valuable information and reach more people.
So, remember how Whale Alert listed the sending wallets as unknown? Well, a quick look at the ledger tells you who actually activated those wallets in the first place. These weren't some random addresses that just popped up out of nowhere. And it's the exact same story for the destination wallet. It wasn't some new mysterious player coming onto the scene. Nope. It was an address with very clear historical ties to a major entity that everybody in the XRP ecosystem knows. And here it is, the smoking gun. The on-chain data is crystal clear. The funds moved from wallets that were activated by Ripple, specifically wallets known as Ripple 47 and Ripple 49, to a destination wallet, Ripple 50. All three of these wallets trace directly back to Ripple itself. So what does this all mean? It wasn't a whale. It wasn't some big market play. It was just an internal transfer. Think of it like moving money from your checking account to your savings account. It was just Ripple, the company, reshuffling its own funds, probably for totally normal reasons, like security updates or just rebalancing their operational accounts. So let's zoom out a bit. The really crucial point here is understanding the massive difference between a sensational headline and what the data actually says. And honestly, this whole event is a really valuable lesson for all of us. So, to wrap it all up, this huge 200 million XRP transfer wasn't a market signal at all. It was just Ripple doing some internal housekeeping. It does show they're actively managing their money, which is good, but it had nothing to do with where the price was going. The real takeaway here is just how important it is to look past those initial exciting headlines and check the data for yourself.
This is why you hear that phrase, do your own research, over and over and over again in crypto. Before you act on hype or some dramatic headline, it is absolutely vital to check the source. Because as we saw right here, the real story, the actual transaction IDs, the addresses, it's usually just hiding in plain sight on the public ledger. So in the end, what started as this shocking whale mystery was solved pretty quickly and easily, just by looking at the ledger. It really leaves us with one final important thought to chew on. In a market that's so often driven by hype, how much of what we see and read every day is just noise? The crypto ledger disclaimer. The information presented in this summary is for informational and educational purposes only. It does not constitute financial, investment, legal, or any other type of advice. The crypto ledger is not responsible for the decisions you make based on this content. Always conduct your own research and consult with a qualified professional before making any financial decision. Cryptocurrencies and digital assets are inherently volatile and carry a high level of risk.